Hey everyone. Hopefully you have a good day. My name's Andy. My channel's Finding Value, and you like making money, like lots of money. Subscribe to the channel. I can help you do that. Give me a thumbs up for this content. It helps. It deals with the algorithms, and I guess if you give me thumbs up, it helps this video go out into YouTubeville or world or wherever you want to call it, and it helps me get more views. So I'm going to answer a question today. I think it's a really good question, actually, and it's this conflicting push and pull of listening to different viewpoints and different viewpoints on the market. And I'm gonna read the question here. Andy, I can tell you right now, the hardest part is holding on for me, and what it is, I'm afraid to lose my gains because I see all these people talking about a market crash. And they show charts overlaying gold and silver and commodities, showing how bonds this and that. And here's what happened last time, this happened, this and that. And they have compelling arguments showing that a market correction is going to take commodities sector down hard. They back up what they're saying similarly to what I do. And my fear is that my initial investment ends up being a small percentage of what I started with. But then I'm like, if I'm not in, I'm going to miss it. What if those other people are wrong? I think I need to ignore everyone else except you, maybe. Lots of laughs. Hope you're having a great day. I am. So I'm doing a video on this because I think it's a very, a lot of people have this. It's a mindset that you have to develop, I guess. So when you're a new investor, you don't have the confidence in the data that you're seeing. And I was the same exact way when I was a new investor. And what got me out of this, I'll call it the middle ground, and puts you into one sector or the, not sector, but one mindset or the other mindset, is I take my cues from the market. So I don't take a narrative. I don't paint this picture and say, well, this is what the picture is, and this is what it should be. And then you try to force the market to give you data to paint this picture. What I do is I take market data. I take it from the charts, I take it from the market itself, and I say, this is the data that it's showing me. What is it showing me? And then I start answering those questions. Is the market painting a deflationary picture? Is the market painting an inflationary picture? And what these people do, I know I'm speaking for them, and I don't want to speak for them, but the majority of people is they come up with some story. And they say, this is what's going to happen. And then when the market doesn't support the data for that story or for that thesis, they're wrong. So what I like to do is I invest based off of what the market data tells me. And what I do is I don't take anyone else's advice. It's only, I'll take advice, or I'll take general information and knowledge from people, and I'll apply it to my own reasoning. Does that knowledge make sense? And if it doesn't make sense, then I don't use it. So what I do is I say, okay, are we in an inflationary environment? Question mark. What is the market telling me? So then I go gather evidence of that happening. Now, obviously they're printing money. They're printing lots of money. And I may view it completely different than someone else. They may view it and say they're fighting deflation. We have deflation. They're printing money for a reason. They're fighting it. Now, my question then spun around to them would be, all right, if we're having inflation, and let's say we have a currency problem and we have inflation, but they need to print a lot more money to prop up the entire system. They can't come out and say we have inflation, because then they can't print more money. They'd say, well, we have inflation. Why are you printing money? That's what everyone's going to ask. What they're going to tell you is we have deflation. We are fighting deflation. We have to print a bunch more money because we're fighting deflation. So they'll just lie to you. Well, how do you know that? How do you know that you're having inflation then? You should see rising yields. If you see rising yields, deflation cannot happen. You can't have rising yield rates and have deflation. I haven't seen it in history. All right, I haven't seen it in history. So the deflation camp is wrong at the moment. At the moment. Doesn't mean they're wrong forever, but at the moment we have rising yields. Now, another thing to ask yourself, can you have deflation and rising home prices or real estate prices? I don't think so. And when residential real estate goes up, we've never had a recession when real estate goes into an expansionary phase. We've never had one. And that's where it gets a little funky, because we have an expansion phase of real estate. We have housing starts going up. We have real estate prices going up, and we've never had a recession when that happened. So we have to see that reverse and go down. Now, if that goes down, I will change my entire paradigm and outlook on stuff that quick if I see it. But the market isn't telling us that. The market's telling us that we have inflation. People are selling bonds. They're exiting bonds like in mass. I don't even think they can control it. That's where I would get scared, is that we have a hyperinflation or some massive inflation tidal wave coming. That's what I'm afraid of. And at least when you're in the investments of commodities, you're protected. You're protected for inflation because these things are going to go through the roof. And we're seeing those commodities go up. So if you're in the deflation camp, what market data are you seeing that I don't see? That's the question that you need to ask yourself. When these people are telling you a story, when they're telling you something, what data in the markets are they seeing that may counteract or conflict with the data that I have? Put it in the comment section if you guys see stuff that conflicts with data that I have. Because right now what I see is a bunch of commodities going through, they're all starting to break chart patterns to the upside. We're seeing silver and gold. Gold initially moved up, and it's been going in a pullback mode for 6 months or longer. That will eventually move to the upside. I'm seeing real estate prices go up. I'm seeing housing starts go up. Every single metric that I follow, dollar going down, yields going up, they can't be wrong. They're all in agreement with each other. Emerging markets going up. Money flows are agreeing with us. So perhaps they're trying to scare everyone into selling their shares or commodities or keep them out of those sectors so that they can rotate in if it's a bank. They don't want people buying this stuff and pushing it up. They want to get in before you do. And they have to move a lot of money. And when you move a lot of money, it takes time for them to move. You can't just sell it all in one day and move it. You know, you've got billions and trillions of dollars. So my opinion has been, take your cues from the market. Don't listen to anyone else. It's just noise. And when you listen to yourself, when I listen to myself, that's when I'm the most successful. And the reason I started this channel, this entire channel here, is for you guys and myself, because I couldn't put up with listening to a bunch of YouTube channels telling everyone that we were going to have this housing market that just crashes. It's like, how? Tell me how. Oh, we're going to have 2 million homes come on. Well, that's not enough. You're going to need 16 million or 10 million to really derail this market. Where's the 10 million? Have you done your homework? Have you looked at the real estate market? Do you know how many homes we're short? Do you know that the inventory is 2 months? If it's 2 months, about 1 month is about 500,000 homes. You do the math. Let's say we get back to 10 months. That's a 8-month difference. 8 times 500,000. That's 4 million homes. 4 million homes shortfall on top of 4 million homes that you need to put into the market. That's 8 million homes right off the top of my head. We're going to need at least 10 to 12 million new homes because you've got 1.5 million on a yearly demand. So that's 1.5 plus 4 million plus 4 million. That's 9.5 million. And then you're going to have some other, probably to get the things moving, 10 million homes. 10 to 11 million homes is what we need to put on the market for this to reverse. That's for it to reverse. And then you're going to need more. You might need 16 million to reverse it and have it crash 20, 30%. So these guys are on crack, in my opinion. And I'm not trying to be mean, but I don't think they've done the homework. They have not done the homework unless I am completely missing something in the data that they see that I'm not seeing. It's got to be something. I don't know where they're seeing this because I don't know how the heck you're going to go from 2 months on record low inventories to a declining housing market, which is basically going to set off this deflation that these guys are talking about, at least the magnitude that they're talking about. Maybe there's something in the background that I'm not seeing. I don't know what that is. I don't see it in the markets. I don't see it in the charts. I don't see it in yields. The bond market's missing it. The commodity market's missing it. The stock market is now heading down and over because interest rates are going up. It's going to put pressure on them. And I've said that many times in my videos. So I don't know what they're seeing. So the best advice that I can do is, this is a very pivotal point in your life. The opportunity is so large in commodities, in my opinion, that now is the time to really study it. And here's another outcome that I could lay out in front of you. Even if we have a market crash, these market crashes typically don't last very long, and you can view it as a very good buying opportunity. Commodities are still where the money is not at. So even if we have a crash, you still want to buy the commodities itself. You're just getting a discount for those commodities. So I think that buying these at these valuations and knowing what I know about the markets right now and all of the indicators that we have, I think it's okay to buy and hold right now. That's my opinion. You guys have to do whatever is best for you. I'm buying it. The valuations are too low. The market conditions are showing me that they're changing and that the money flows are just starting. And now's the time to be in those companies. If we have a market crash, a huge if, I'm going to be buying a lot more, as much as I possibly can with the money that I have. That's all I can do. If you guys feel scared, perhaps you need to carry more cash. Maybe that's what a position it is. My cash is known as gold, silver, and platinum. That's what I hold as, quote, money. It's 33% of my net worth. Well, it's like 25%. I'm trying to get to 33%, but it's tough because I keep making so much money on my commodity investments over on the other side because they're going through the roof. So that's my take on it. You guys can have a different take. If you're scared and you think a pullback could come, keep more cash. That's what I would do. Remember, I can't give advice. That's what I would do if I was scared of a crash. I'm not scared of a crash. I'm invested in the commodities itself. You know the sectors that I'm in. If you haven't subscribed to this channel, subscribe to the channel. You'll know the companies I'm in, the sectors I'm in. You'll know everything. I am as open as I can be. I'm literally putting a hypothetical portfolio in front of your eyes and showing you the returns that I can get real time to everybody. I'm exposing myself to as much risk as anyone out there. I even showed you option calls that I was doing real time if you watch those call options, the videos on EXK. So I'm open book. I'm not trying to hide anything. I'm not trying to fleece anybody of any money or anything. So do your homework. If you feel uncomfortable, keep a little more cash just in case something were to come back. And if it pulls back, you got some cheap shares. If it doesn't pull back, you've got your cash that you can sit on. If you guys like this content, subscribe to the channel. Give me a thumbs up. Leave comments below. I'm going to try to help you guys out with whatever comments, questions, concerns that you guys have. And I take these things very seriously because I want you to be successful in your life. I want you to be successful. Thanks for listening. This is Finding Value.